live, Steve. All right,
Wow.
we are live, and we are Tannerless,
and we are late in his honor.
and we are late in his honor to commemorate him. We are going to be talking about some SoFi and other stocks. Guys, how is it going? We have a new crew, new pod. Steve, I haven't seen you in forever, man. You call me sometimes when I'm at work and I hang up, but
I know the deal. You just don't want to pick up. It's okay.
you call like in the middle of the day, Steve. Like I don't.
No,
have,
I call when I have like 5 minutes.
I don't
because I
have
rarely get 5 minutes.
schedule like you, where like at 2 p.m. on a Tuesday, I could just call my friends up. I'm busy.
Yeah, I had something I wanted to ask you.
Yeah. Where's Dahmer? Yeah, Tannor is not here with us right now. He might join later, but we don't know. Welcome everybody.
I mean, he really can't join if we don't let him in.
Yeah, I mean, we have that ability. We can just refuse his entry.
We could.
But he's really not here. He's really said he was going to be really late in our group chat, and I'm like, surprise. Like, come on.
It's the All-Star crew. They are on Canadian time. Yes. All right. Chris, Roy, or Steve, one of you guys have to let us know what the news is for SoFi, because I've had a collective 10 minutes this entire week to check Twitter.
Well,
we have earnings coming up. I know that much.
Yeah, we'll talk probably mostly earnings today. I think it's probably worth mentioning, especially with Steve and Chris on here, who there's crypto news this week, and a couple of pieces. One is one of the regulatory hurdles was removed. I still think that there's a few remaining, and I need to go through those just to double check. But the other part is also with job postings. Did you guys catch that news with the job postings and the crypto?
No, Tevis has been under a rock, apparently.
Yeah. I mean, like, if it had come out on a different day, I might have missed it because, like, the last 3 weeks has been super busy. It might take me a little bit while to find this. If one of you guys wants to pull it up and then share, and then Tevis can throw the screen up there. But in essence, we're seeing a lot of crypto-related positions, specifically in the engineering side and management side, be listed by SoFi with pretty generous salaries, I would say. And to some, it signals like, hey, this means that they have the green light and they're hiring these people because they can launch at any moment. I don't think that's the case. I think that they have that they start your engines, but it's not on your market, set, go. Like maybe it's on your mark at this point. That they're getting closer. It's more of a when, not if. And I think that the number of people that they're hiring at this point indicates that they want to be ready the moment they have that green light, and that they are going to probably build out some new crypto products as well. That this isn't going to just be the crypto platform that we had with Invest. That they are building additional products on top of this as well. What do you guys think?
So this is the list of 9 crypto job openings that were posted just like yesterday, and so it appears we'll talk about the crypto thing, and then we'll talk about what this might mean for members in a minute. I don't know if you guys saw that. Did you see that part, Roy?
No, I don't think so.
Oh, okay. Then it'll be a spoiler for everyone. So anyway, these are the 9 positions. You can see the salaries are, all of them are in 6 digits, some of them in higher than that. And so, yeah, I mean, between this and then the code snippets that we've been seeing online where there's like calls for the code or calls for crypto in the code, there's new images like that, like their little bowl that they have that for like uploaded into the app new in the last like 2 weeks. Like there's a bunch of stuff going on when it comes to crypto. It looks like it's right around the corner. It would be, I mean, I'd imagine based on just this amount of stuff that we're getting that we'll probably hear some sort of commentary about it in earnings. I think that it's going to happen in Q2, just based on like so much that we're seeing. There might be regulatory hurdles that I'm not aware of that are still out there, but I think for the most part, like
there's at least 3.
There's 3 more,
I think, unless they've unless they've cleared those and I somehow missed it. But yeah,
Regulatory hurdles.
regulatory hurdles remaining. Maybe 4, depending on whether they need explicit permission. Although I think that they maybe already have been given this by the OCC. They, of course, contingent on them having their banking charter, banking license given. They had to divest from crypto, and so there's a question of whether or not they need explicit approval. I would guess that they probably already have it because the OCC was one of those early ones as far as related to crypto that they kind of backed off. And we still need, I know FDIC is one that we still need information on. And there's some Basel III specific to crypto stuff that has not been rescinded yet. OCC also mentioned that there's a few things on their end that they need to look into, basically. And I've not seen a revision on those yet or an update. So I there might be more out there.
I think of the Basel III things, though, like Besant had some comments that they were just going to ignore some of the things that Basel III was talking about, right? Like almost.
Okay. But do you think that that's good enough for Anthony Noto?
I don't know. I have no idea.
Probably not.
I think
if this
that
was
he's ready to
Robinhood
go.
and they had a banking license, they'd probably go for it. Anthony Noto and his team, no. They will
I think
wait.
if they got permission, though, like from the OCC, right? Like if they followed up with everybody.
Yeah, but I mean, like, you know as well as I, like, United States government, it's so multifaceted. Like if OCC was the only thing in charge of banks and trading and everything, it's like, great, green light. But there's like 9 to 12 departments depending on, so it's a mess. So I think that you might be right. It could be Q2. I think Q3 is more likely, but initially I was thinking Q4 to Q1. It's just a lot of these hurdles come down faster than I expected. So do you think, okay, so Steve, I haven't heard from you. You maybe don't care, but when do you think the crypto platform relaunches?
Man, you really want to get the entire SoFi community to hate me more than they already do, don't you?
Well,
Are you going to say never?
so maybe Steve, before you answer that, I bookmarked this question, and I think the people just want to know: did Steve sell SoFi?
Not yet.
Not. Oh, spicy! Right before earnings, Steve, tell us more.
Do tell.
Not yet. Well, which one do you want to hear first? Because I mean, I explained it to Tannor why I'm still really annoyed and why I considered selling, but I didn't. I actually think I went neutral on Seeking Alpha. I don't think I'm bullish anymore on Seeking Alpha. I have to check. But
That's because you're dumb.
nobody ever said I was smart. I can tell you that.
I'm just kidding.
So
No.
which one do you want? No, I haven't gone hold yet on Seeking Alpha. I'm probably going to.
So real quick before you talk about that, crypto platform, does it launch this year or not? Then we can keep it simple.
Care less, unless
I figured you'd say that.
Unless they come out with a product that is super efficient and they undercut Robinhood just to screw with them. Otherwise, it doesn't matter to me.
What they should do is enable crypto payments, or at least be working towards it. It might take a little while, so that when you swipe your card, credit card or debit card, you can set that up to automatically route to whatever crypto payment you want, automatically convert on the other end. It does take some programming, but PayPal already does that. So not with a physical card, but that would be a neat product. I think that they're probably going to launch some crypto lending stuff, and I'm sure that they'll build out some other items as well.
Okay.
So, spill the beans, Steve.
Well, look, my thing, and it's funny when people say YouTubers going bear. Like, I'm not a YouTuber, so you can say Steve is bearish. That's fine, but I am not thrilled about not having business banking. Still, it is a huge factor for my bull case. I am not happy about at least giving some vague information about where we are in that RFP processes for the tech platform, because if they want a tech multiple, signing new loan registration deals with Blue Owl Capital, Fortress, et cetera, is great for the business, but that is more traditional banking. Yes, it destroys the bear thesis around not having an outlet, not having the ability to offload loans. But at the end of the day, if they want to be looked at as a tech company and get a tech multiple, or even a hybrid multiple, they have to have a real banking platform that becomes banking as a service. They stop talking about it on the earnings calls. They stop talking about it at conferences. I understand they have NDAs in place, but you could at least say to the shareholders, look, we've been involved in 5 RFPs for over a year. 2 of them are coming to an end somewhat soon. We anticipate the next 1 or 2 quarters we'll hear, and we feel we have a good shot. In total, we're participating in 15, ranging from community banks to large financial centers. They could be as vague as that, not violate any NDAs, and at least give shareholders some update on it. Because right now, the only thing that we know is it is efficient for SoFi, it is saving them money, and it is allowing them to innovate quicker. But the whole point of this was not just to power and make a better platform for SoFi, but to power the back end of its competition and generate reoccurring incremental revenue with annual kickers from the competition, so it could be looked at as a true fintech, not a cloud-based bank. And going further into offloading lending and having bigger outlets for it, why I'm all for it, that is a traditional banking company. That does not separate them from a business development corporation or a traditional finance company, any type of bank, regional, large money center, whatever. So I'm more focused on a true tech banking company, and to get that, it lives and dies with the tech platform. And then the business banking, you have all these platforms for regular banking. It shouldn't be hard to replicate that. You have Liz Young there, head of investment. She could head up wealth management. You bring business banking in, you allow loans for businesses, you allow checking and savings for businesses, payments, and then you start a wealth management. You already have proprietary ETFs and mutual funds. So you know where I'm going with this. Now you become a custodian of 401ks and 403bs. So not only do you give them an option on the SoFi S&P ETF, et cetera, get your basis points off of that, but you also get the asset management fee for being the custodian for the business retirement accounts. So you get to double dip. It's just why they're not doing that's crazy.
And so, okay, there's a couple things. I absolutely agree that there are synergies to sort of vertically integrate across the board with regards to using their tech platform and their business banking aspect to unlock synergies in terms of what they get. I get that. The 3 things that you mentioned is basically the loan platform business being this fee-based revenue source doesn't really constitute in your mind a huge differentiator of them being a banking platform. And the tech platform is the bigger differentiator of what makes them unique, but that's not really fast growing. And then the business banking is something that they don't have right now. And you've been asking them to roll that out for the last couple of years. Where would you sort of prioritize those things? Like, I think one thing that's reaccelerated the bullish sentiment across the retail community for SoFi in 2025 has exactly been the loan platform business because of the revenue that they can generate relative to the little risk that they can take on. And,
and I'm not saying don't do it. I am, like I said, all for it. I think it's great. It adds to the revenue and the adjusted EBITDA. It adds to the top and bottom line. It drives earnings. So it's very important, but it doesn't differentiate. So I would do everything that they are doing, but I would really put an emphasis. And look, they can't control when other companies are going to make a decision in the RFPs. That has nothing to do with them. That's all back office mumbo jumbo. At the end of the day,
right,
I would like updates as a shareholder on where they are in those processes, because to really differentiate themselves, what is different than from SoFi to a business development corporation to Bank of America expanding their lending book? That's traditional finance. And while it's great, they keep saying, like Noto just said, he wants to be a top 15 tech company in the US. Well, okay, you want to be looked at as a tech company, then you have to have a tech platform, not just a tech platform that you're using, a tech platform that you're generating revenue from. So I'm not asking them to violate any NDAs, but I am asking for an update on where you are in the RFP processes, how many RFPs are you participating in, and what are the future business prospects? Because the banking as a service would be something that only they have, that they can corner the market on. And the whole industry is so ripe for it because the traditional banking system is archaic and they have to go to cloud first. They have to adhere to new standards with banking regulations. And this is something where SoFi could really make a huge dent. And this is something that no analyst would be able to refute. And no other banking company could say that they have. And this could be the thing that differentiates them from Robinhood. People look at Robinhood as a tech company, but if SoFi actually comes out with this stuff and they win, I'm not going to say any names because I have no idea who they are in RFPs with. And if I say a name and it happens to be right, I don't want anybody saying anything. But there are some big ones that if they got, and I'm not talking about regionals, but large finance centers, if they just got one of them, it would send shockwaves through the entire market. And people would look at like, wow, they just got XYZ. Maybe they're going to get some regionals and some community banks also that are pretty big. And then they start getting a couple of them. Others start saying, wow, they all switched to the SoFi platform. We really need to look at them and update our stuff.
Can I jump in?
Please.
Okay. So, Steve, you probably didn't because you never read any of my stuff, but any chance you read my article about the technology platform?
No.
Okay, that's what I thought. Okay, let's go through a couple of things real quick. So first of all, I think you're absolutely right that the communication from SoFi is really suboptimal and they have to fix it, right? Like I'm with you. There's a lot of things that they could share about the tech platform that wouldn't like have nothing to do with their NDAs. It would give investors a bunch more information. You're talking about RFPs. We could also they could say, this is how many community banks we have. This is how many platforms we have. This is how many fintechs are signed up. Like these are the different. This is how many are using Cybercore Cybercore. Is that what it's called? Cybercore banking. I'm saying something wrong. Anyway, right? They could break it up. They could give us a whole bunch more information. And the lack of information is frustrating. And in my opinion, needs to be better. So I agree with you there. But a couple of things on the other stuff you said. So number one, they are operating in the same macro environment as everybody else. Do you know how Galileo's growth looks compared to FI, FIS, Jack Henry, Encino, a bunch of their competitors?
No, I've never heard of half those companies you just rattled off.
So here we go.
Who's Jack Henry? It's not like a person.
Jack Henry is a banking core provider. One of the biggest ones. Let's see. Present.
I can sum up as you're pulling that up. In essence, they're performing well in a segment that's performing very poorly for almost everybody.
Yeah, so here,
Tevis,
if you can pull this up. Okay. So this is just the blue is Galileo. These are a bunch of if you just pull up public comps, these are all people who nobody does exactly what Galileo does, but these are companies that share some overlap with what Galileo does. And this is over the last 2 years. So over those last 2 years.
You put this on Substack?
Yeah, that's where I write everything.
That's why I don't even know because
Seeking Alpha stopped publishing my articles. I'll just send them. I'll text them to you.
Yeah, you have my number
because that's the only way that this happens. All right, we'll do. Okay. So first of all, they're actually outperforming everybody except for Encino, right? Okay. So this is 8 different companies. So the backdrop here is that actually fintech's really been struggling, and especially these type of providers. And so I agree. So Galileo's underperformed what I expected of it. Galileo has underperformed their own guidance. They had the goodwill write down, right? So there are performance issues. Completely agree. But when you look at it with the kind of the 1,000-foot view and look at the other macro, look at with the macro involved, it doesn't look quite so bad. And the other thing, so I'll stop sharing real quick. But here's the thing. What is, that, or you should know this, what's the contribution margin of Galileo? Do you know?
Contribution margin or contribution profit? I haven't looked at it in months, so I don't remember.
So contribution margin of Galileo is about 33-ish, so low 30s. Okay. Do you know what the contribution margin from the LPB is, from the loan platform business?
No, but I'm going to assume it's over 50%.
Yeah, it's over 50%. So like the LPB right now is at a run rate of something close to, I don't know, I tweeted it out. It's over $300 million annually.
Yeah.
So the LPB, which they've grown in 10 months to where it is today, is the same as if Galileo were literally more than doubling. So had more than 100% year over year growth rate. Like that's the amount of money that it's getting in. And so like, I understand and I agree that it is disappointing, but, and the other stuff that you're talking about. So I totally agree. I think business management is low hanging fruit. I wish that I thought they would have business accounts by now. Honestly, like I thought that for sure would have come in 2024. They didn't. I think that they probably need to ship products faster. Like that's my opinion. But at the same time, like Noto said, we are focusing on the highest ROI products first. That loan platform business is so high margin and such high ROI that it's literally like they more than doubled the tech platform over like in the last 12 months just by having that. And that's a big, big deal from like the actual bottom line. The other thing is that like they say, so people, you just said the same thing. You're like, Robinhood's a tech company, right? What? How much of Robinhood's revenue?
Viewed as a tech company.
They're viewed as a tech company.
I didn't say they're a
right?
tech company.
Why?
I said they're viewed as a tech company.
But why? What's the underlying reason they're viewed as a tech company?
I mean, you're asking somebody who doesn't really follow Robinhood, but I would think that they're viewed as a tech company because they make it seem like they are innovating and breaking ground and providing products that people want in a way that is better than other people. That would be just.
What about like Affirm or Upstart? Upstart, literally, the loan platform business is what Upstart does. And Upstart's viewed as a.
I think there's.
My point is,
there's a couple aspects, right? Because like SoFi is viewed as a bank because the predominant revenue sources have been loans historically, student loans and the lending segment in general. Whereas Robinhood, I think, is viewed as a tech company based on how they make money from their brokerage, and more recently, as a result of the pace of the innovation and the products that they're releasing and the user experience of those products. Like there is, from a retail investor perspective, new product offerings that break the mold of the traditional financial suite of products that have been out there from a brokerage perspective for retails. And so that's how Robinhood is viewed as a tech company, because if you were to look at all the companies from a brokerage perspective in the space that Robinhood plays, they are the ones who are innovating the most. And what I mean by innovating is having features that are released that do things in a more efficient way or in a more seamless way from a user experience perspective. Whereas for SoFi, like SoFi is a tech company in many ways, but they don't really get that moniker because they don't have events geared around their product innovation. They don't have events geared around their user experience. They sort of drop their new product offerings like as an afterthought in a fireside, and the predominant revenue sources are from lending. Therefore, and you add the banking charter on top of that, and it's very, very difficult to view SoFi as a tech company because Galileo would be the closest thing you can, and it's not even their biggest revenue contributor, and it's not even their, like, it's something that's B2B, and it's very much harder to understand from a retail investor perspective. So that's how I would probably view that distinction.
Yeah, I just want to say one. Chris, go ahead.
No, can I add just one real quick thing? I think the other thing is how they're built. They're incredibly efficient. There's no silos. They're very vision and mission driven, and they have just an exemplary core. So like as a company, not just products, they're structured like a typical SaaS tech company. So I think that's part of it too. There's a lot of little things.
Go ahead, Steve.
Yeah, I was just going to say, look, I do not know better than Noto or his executive team. And as a shareholder, I'm very happy with what they've accomplished, how they've pivoted, and what they've done to drive the business. I don't think many management teams would be able to pull off what they pulled off. I think they've done an exceptional job. My frustration is that when I look at this, the tech has been lagging, and I agree. They should be focusing on the highest ROI because that drives the most value for shareholders. But I think there's a way for them to do everything they're doing and just spend 5 minutes on each earning call addressing the tech platform, because that would still make it seem like a priority. when even though it is a priority, it doesn't seem like it is. And I'm really happy about the finance side because what's going to happen in a couple months from now when the Fed starts cutting? Oh, student loan originations are going to go through the roof because people are going to start refining. Student loans has been stagnant even in Q4. You have the two biggest lines are personal loans is bigger. I'm sorry, personal loans is way bigger than student and homes. So as the Fed starts cutting, CME Group has the most probable scenario for this year, 100 basis points getting cut off. You will eventually start seeing refis on homes. You'll eventually start seeing student loan originations on refis also. And the finance side is going to expand a lot more, which is a blessing and a curse. It's a blessing because better financial metrics. It's a curse because the span between tech and everything else is going to expand even more. So it's going to look even less like a tech company unless they start bringing in revenue from the tech side.
So here's the thing. People call Robinhood a fintech, right? People call Affirm a fintech. People call Upstart a fintech. How many of those companies have SaaS revenue?
I don't follow those companies. I have no idea.
Zero, right?
And,
So none of those have any
fintech
SaaS
because
revenue.
they operate in the cloud without a physical location. That's why people get
Right.
called fintechs.
Right, but they also get, here's the thing. Everybody says like SoFi needs the tech platform to grow in order to get a fintech multiple, right? I don't understand where that comes from. Like it's the most, to me, it's a really ridiculous statement. And the reason why is because the reason that those are tech companies, so Upstart has tech that powers their business that allows them to grow faster than a traditional finance technology. So does Affirm, so does Robinhood. The difference between them and SoFi is that SoFi not only has their own in-house tech that allows them to outgrow everybody else, right? That they've grown faster than all of the companies that I just talked about over the long term. Hood has had an amazing 2024. Don't get me wrong, right? Like, but if you look at the long term, SoFi is actually outpacing them since both of them came public in terms of like total growth.
Yeah.
So if they can power their own growth at 25, 30% year over year CAGR, what does it matter whether or not the tech platform now, like the tech platform itself is then just gravy on top, right? It's doing 400 million in extra revenue that Robinhood doesn't have, that Affirm doesn't have, that Upstart doesn't have, that Shift4 doesn't have, that none of these other quote unquote fintechs have. So it's ridiculous to me that you can be called a fintech if you have a bunch of technology that powers your financial app, but you can't be called a fintech if you have a bunch of technology that powers your financial app and you sell that to third parties, but that third party growth isn't fast enough, which is something that's out of your control, right? Like the mental gymnastics to do that is weird to me. Now, I understand that that's how the market views it. I think that the market is like sleeping on this. I think that the market, like at the end of the day, in 5 years, what's really going to matter is how much growth overall they've seen and how much of that they pull to the bottom line. And if I were to choose one of SoFi's segments to underperform, I would choose the tech platform.
Yeah, and Chris, I
obviously want all of them to grow, right? But anyway,
and I completely agree with you. And whoever says fintech multiple is crazy because look at PayPal's multiple or Square's multiple. The multiples are value companies at this point. The two words that I always say are hybrid multiple or I should say two phrases. You guys have heard me say hybrid multiple probably 100 times over the years, or tech multiple. I've never said fintech multiple, not saying that you're saying that I am. You're saying in general, when people say fintech multiple, go look at PayPal's multiple and tell me if you want that multiple. Like it's one of the most egregious things out there. And I have thoughts on that for the after hours too, about what Alex Chris should do. But I agree with everything you're saying. And SoFi is doing a great job, and I want them to attack the highest ROI. But Tevis, this is your stream. Let me share my screen real quick.
You're not sharing anything.
I know. I got to figure out what tab it is. Just give me a sec. Here we go.
He's a boomer. It's fine. Just give him.
You know what? That's not nice. That's ageism. Not nice.
Hey, I had to get you at least once because you gave me that lousy block stock. I mean, come on.
It's gonna work out. It's gonna work out.
Are you technically a millennial or a Gen X?
I'm right.
I actually don't know.
It depends on which category you're using. So 1980. So I think of myself as a millennial, but it depends on who you ask.
All right.
Yeah, I probably
Anyway.
missed the cutoff by like 6 months. So my biggest thing, and I probably have to blow this up just a little bit. So just give me a sec. And look, you're right. The finance is where all the money gets driven in from. The problem is, don't make statements that you want to be a top 15 tech company unless you're really able to drive that revenue. Because right now, the tech revenue is under 100 million a quarter. And then when you look at the contribution profit, it's next to nothing. Lending is the bread and butter of this company, and then financial services. So in order to get a hybrid multiple, in my opinion, you got to have at least a third of the revenue or a third of the contribution profit coming from tech. Now, if you don't want to go that route and you just want to power your own platform and all, that's fine. But if the goal, and they've always said the goal is to be looked at as a hybrid company, to be looked at as a tech company, I don't know how you get there having 5 or 10% of your revenue and contribution profit coming from that line. That doesn't make sense to me.
Like, I understand that stance, but I also think it's a very black and white stance to take. I think that there is a strong case to be made that aspects of financial services are tech driven in terms of how they're making money, especially considering what Chris was saying around the mental gymnastics that the market goes through to give something like Upstart a tech multiple, where their entire value proposition is like the AI that, you know, assesses the credit worthiness of their models, and therefore they should have some type of tech valuation. It really is a large part coming down to the story that the management team tells the market and gets the market to rally behind. And part of that is financials, and part of that is the communication, I think, with the market through a lot of these different channels, right? You know, I've seen multiple, probably way too many CNBC segments around Upstart talking about like, hey, here's how we underwrite, here's how we leverage AI, here's how we do this and that. And the market gets excited about the potential of the tech infusion of their services. Whereas for SoFi, even us that, you know, research this company on a very much more granular basis than normal people, are still defaulting to Galileo as SoFi's tech enablement in their platform. Whereas financial services, you know, with Cash Coach and all of these other aspects that they're launching, they have, and they will continue to have, a bigger amount of tech-enabled product offerings that will differentiate them on financial services, especially as financial services becomes more integrated with Galileo products, right? And so, you know, I do think that they can get a tech multiple or a hybrid multiple, Steve, even if their tech platform, Galileo, is the slowest grower and is the slowest, you know, revenue segment of their total share.
They absolutely could. And look, they could get a much bigger multiple. You look at Hood's multiple right now. SoFi could get a much bigger multiple. Absolutely. There's no question about that.
But they have to communicate it and they have to frame it correctly to the market. And that's the point that I'm trying to make is
I agree with you.
Position themselves as a tech-first financial services company, as an example, then you can leverage educating the market on these tools like Cash Coach. And I'm just using that as an example because it's the most recent one we have. And if I were to ask, there's 500 plus people watching. If I were to ask these people, what is Cash Coach? I guarantee you less than half of them would have any idea. And these are regular viewers of the show. And that is a point that, you know, I would love to see more of these, you know, product demonstrations, product announcements, where they're demonstrating exactly the use cases. So people can then extrapolate outwards. Hey, I can totally see how this can transform banking from a very reactive model of the user knowing what they need to do with their money to a proactive model of the user logging in and you already have all of the user's data. And then you have the AI suggest for the user what they should be doing. Like that extrapolation, that vision, you have to implant that vision into the minds of your audience. And this is why, just going back to my original point, you know, from a perception point of view, Robinhood is viewed more as a tech company because I can literally watch a 1 hour live stream of them demoing these products and they can show me what the product offering does, what the vision is with that product offering, how it integrates with their suite, so on and so forth. And then I can say, okay, well, I know where this product offering is going to grow 2 or 3 or 5 years into the future. I can't get that same level of insight from one sentence on a fireside chat.
And let me add one thing to that. The most important thing at this point to me, I could care less if they do an event like Robinhood. Could care less. But do something. They could be Notos sitting in a conference room at SoFi headquarters. Don't spend any money on it. Use YouTube, live stream it. When's the last time they had an investor day? I mean, they don't even have to go that extravagant, but I think this whole thing about not giving out the playbook's ridiculous.
Yeah.
Elon does not care. He will tell you exactly what they're going to do, and eventually he's going to deliver, whether they keep pushing the dates off or not. You know what Jassie's doing. You know what Sundar Pichai is doing. So have an actual event, show the shareholders the roadmap, and get everybody excited about what's coming. Like the communication is just very poor on a lot of things.
So, Steve, I think for leaders, you can just you can announce plans and nobody's going to stop you because you're leading. There's no one there to trip you up, especially when you execute like, Robinhood or, Coinbase or others, that are leaders in their space, Palantir. The issue is if you don't have that same velocity as far as products and you don't have the same quality of products and maybe you don't have the same quality of personnel or the right personnel for whatever you're trying to launch, if you announce it, and I mean, that's kind of how I see SoFi, is that they're maybe just a step down on some of those from where, some of the leaders like Robinhood are. If you announce it, then others can absolutely just say, you know what, that's a great idea. We're going to go after that. I think he almost did announce it.
Roy, there's a difference. Not many companies can actually implement it. SoFi has the tools at their disposal internally to deploy whatever they need to. They don't have to wait for a third party to build it. I'm not buying it.
Yeah, I don't know. Like we've seen, we have seen product launch increase. Loan platform business is a huge deal. You can see the direction they're going. And then Nota's reference as far as like the last question with Liz Young, what would he do? He talked about disrupting payment rails, which is like a phenomenal goal and endeavor. And they may end up leveraging crypto for that. And if so, like, I wouldn't see them as a leader in the space, but they can definitely make inroads. I think that they would actually do very well there. So that would, I think, get the market, once they understand what's happening there, quite a bit of excitement. One last thing, and I know Chris was going to share something. We brought up Robinhood a couple of times and talked about Robinhood multiples. Tevis, can you throw this up real quick? Because I want to show, like, we're not talking about crazy multiples right now. And part of it is everything fell, including Robinhood. But PE ratio of about 30, forward is 35. The forward peg is like 4. So that's not a crazy PE given the growth of Robinhood. A lot of that's uncertainty. If we go into a bear market, this is going to be wildly off. So, and to the downside.
I mean, the price to sales is like 4 or 3x what SoFi's is usually, or has been recently.
Yeah, it's a little lower than Palantir's.
The one thing that I was going to say, shoot, I just totally lost my train of thought.
Sorry.
No, it's fine. Come on. Can't remember.
Or were you talking about product launch speed?
Oh, that's it. So the one thing that I think, I know that Tevis and Roy weren't really following SoFi back like during 2020, 2021. The reason that I actually got into SoFi, so I had a Robinhood account, I had a SoFi account. SoFi was launching stuff so much faster than Robinhood back then. So like from the time that Noto first got in until the end of 2021, like you got credit cards, you got Invest, you got Relay, you got checking and savings, like that didn't even exist. You got margin accounts, you got the Galileo acquisition and them running the back end. They launched peer-to-peer payments. They launched on the SoFi app. I still use that to pay people a couple of people at my work use SoFi. We pay each other with SoFi's peer-to-peer payment system. There was also the Pay in 4, which never really took off, right? Like some of these things never really took off. But I think during that time, when I was on Robinhood, the only thing I remember that they launched that entire time was crypto wallets. Like that's it. And so like we have this really, the one thing is, I think a lot of people have recency bias, because and I'm not saying that, like, again, I bought Robinhood recently on this recent downturn because they have been innovating, because they have been launching products, because they're doing things that are really, really impressive, because they obviously have a product driven nature. So like, this isn't to like, I'm not trying to say that Robinhood's a bad company by any means. But what I'm saying is, if you look at 2023 and you look at 2024, it's obvious that Robinhood is the more innovative company. If you would have come to me in 2022 and asked me who's the product driven company, the answer hands down would have been SoFi. And you could have backed that up with, and so like, so we have the, and during this whole time, they've also been, I am hoping, and I'm not guaranteeing this, right? I'm hoping that once they move the entire core on to Technisys, that we will see things launch faster. I'm not counting on it, but I am hoping that that's been a big part, is moving their back end onto Technisys, and then they can start rolling out products faster again.
Chris, isn't that
we'll
this
see.
year, though?
It's 2025, yes.
This was the last year in that slide deck, I believe, when they acquired Technisys.
It's by the end of this year, they'll be completely over. So, in 6 months or so. And the other thing is, we're actually seeing, so there have been updates. Again, people have been sharing, well, one person in particular has been sharing like snippets from the code where they said they're seeing updates on options that weren't there before. So like new parts of code that weren't there before. They're seeing crypto stuff that wasn't there before. And they're seeing cash coach calls all over the place that wasn't there before. So we could get some fireworks on this earnings call about something new that could be really, really exciting. And I'll use that as an awesome segue into our earnings predictions.
Yeah.
So before we get into earnings predictions, I have a question for you, Chris. Did you see that Morgan? I'm not sure if this is real or not, but I saw something about Morgan Stanley utilizing E-Trade, building a new product to try to. I got to research it more, but it looks like, from what I was reading, because they acquired E-Trade, I believe, a year and a half ago or a year ago, whatever it was, they've been working on a new product to kind of combat everybody in the space. Do we think that if they come out with something awesome, that's going to matter for Robinhood? One. Two, do we think that Robinhood's latest grab of customers, with, I think, is genius, by the way, and I think it hurts SoFi? How much do we think this is going to impact SoFi? The fact that Robinhood is giving a 2 to 3% match on capital brought over, and you have to lock it up for 5 years. So now anybody who comes over, you can't leave. If you bring $1 million over, you want that 30 grand. You leave, you don't get it. You have to stay for 5 years. So those are all customers that SoFi can't get.
Yeah, but Steve, I think, so I agree. And I think a couple of weeks ago, I was asking the same questions and having the same stance. And then what changed was we got even bigger and more frequent deals on the loan platform business. Like, even if Robinhood takes a bigger market share, let's say on the brokerage side or on the SoFi Invest side from SoFi as a result of their offerings, if SoFi continues to ramp for one more year of their loan platform business the way they are, like, from a balance sheet perspective, it won't matter at all, because they're going to be raking in so much money by focusing on this other area of fee-based revenue with low risk from a B2B side, then that they won't care who they're losing on the B2C side, so long as they have the offerings to have the full ecosystem end to end for their user base. I mean, that's a non-answer to a degree, but at the end of the day, it's like, it's where they're focusing. It's going to yield more for them than trying to juggle all of the streams at the same time.
I get it. I just can't help but think SoFi should never let Robinhood get to this point, because they had the ability to cut them off every which way.
Can't stop Vlad. And now it's
get off the stream, Roy.
Rules too.
Wearing a PayPal shirt, stumping for Robinhood. I need a SoFi shirt, really do. Now, there are two other pieces of SoFi news I think that we can integrate in earnings predictions. One of them relates, actually both of them relate to the lending side. So maybe we'll save that. And Chris, you seemed eager to go into earnings. So let me ask, I know, Chris, you have predictions ready, I'm assuming?
Yeah, we've got 14 minutes. We probably just want to go through them, I would assume, fairly fast if you guys have some.
Steve, did you guys have any earnings predictions or no?
No, I'll have some by this weekend, hopefully, but I don't have any right now. Other than what Chris mentioned, where I absolutely think with all the stuff that's been leaking from a product perspective for what they're getting ready in their code, that I think they're going to drop some news on earnings day, as they've done in previous earnings reports. So I'm looking forward to that. But we can also just go longer, Chris. Like, we're not limited to just 1 hour or two.
All right, that's fine. Well, if nobody else has earnings predictions,
I do.
Okay,
but
good.
It's not going to be the level of detail of yours, but I've got members, EPS, revenue, and I've got the breakdown of revenue as far as the segments.
That's good enough.
So.
Let's start with members. I assume everybody has at least a thought on members, and I also assume that everybody's seen the website traffic, because you guys have talked about those, right?
That
Not
and then
really
the
traffic, the rumors or the leaks,
Yes.
if you want to call them that.
Yeah, we'll talk about that too.
yes.
So maybe do we want to start there and then
Yeah,
we'll
we'll
get
start
Yeah, we'll start there. I have it up. Give me a second. So Vadim found this.
And I hope it's right. I hope they're not just rounding or they put that in there, because that would be an exciting result.
Okay, so Vadim posted. Let's see. I should probably zoom in. So Vadim posted. They're like, "Hey, don't tell anyone." This was when they first were launching, or this week when they said there was crypto stuff. And then he was going through the actual posting, and I don't know if you guys can read that. I will try to zoom in.
11
it says-
million members.
Crypto products and services for our 11 plus million members, and all of their previous stuff has said 10 million plus members. And then after he posted it, I reposted it.
Sorry,
And then
I took over this for a sec. This is their latest earnings report, where they have reported 10.1 million members, which makes what Chris posted or what Vadim posted kind of suspicious, because they're saying 11 plus million members, which is about 900K more members. Sorry, go ahead, Chris.
No, but then I reposted that. This is what? So this was at 5:49 my time. This was at 6:20. So like a little over an hour later, they changed the verbiage to be 10 plus million members after we started posting this online. And then just a little bit later than that, they actually, so 10 minutes after that, they removed it completely and just said for our members. So if anything, the interesting thing is, like, if it was just a typo, like, why would they have changed it twice? My confirmation bias wants to say that they got that high. We'll see on Tuesday. But between that and the website traffic numbers that we've seen, I think that this quarter is going to be really, really high for member ads.
So can we just why would they change it to 10 and then remove the number altogether, as opposed to
I don't know,
leaving it at 10 or removing it? Like 10 plus still encompasses 11.
Yeah, I think because they probably put 11 and they realized that they shouldn't, that it's too early, and then or that it was wrong. It could have been wrong.
It could have been a typo.
Yeah, or they round. It's like 10.8 in, or it would have been 11, but they actually lost because they do have some attrition each time. Any of those things, they're close to 11. If they're above 11, like that's pretty amazing. That's higher than my prediction. I'm assuming it's a typo, but man, it might not be, and that's exciting. So, what do you guys predict?
I have predictions, so why don't you go first, and I'll give mine.
Yeah, I did 850 million. Not million.
Million.
1,000.
That's impressive.
More than the population of the United States. Yeah, 850,000, which would be below what they would need to get to the 11 million. So I'm probably the bear, but that's still like really good. 850,000, like, it's amazing. It's better than the Taylor Swift quarter, guys.
Last quarter was 785. That was the most they'd ever added. So 850 is a lot.
I mean, it really might not be a typo. They don't quite need 1 million, and I do think that they will do 1 million at some point. They have a lot of things going for them in quarter one. They did have a little bit of headwind with the wildfires that are out there that it caused a little bit of disruption there, but I don't know. So what do you have, Chris?
I actually had 870K. And then I saw that tweet and I was like, screw it. They're getting 11 million members, which means they have a 903. So I have some attrition built in there. So I think 903,000 new members, which gives you net is like 870.
Yeah. No, I came out with a video and then I was like, oh man, I forgot about that. So yeah, I think, I don't know. There's people that are astonished, but if I'm the bear with 850,000, like, oh man, it's a good quarter.
Tevis?
So granted, I don't have a number. My number might change if and when I make a video this weekend. What I will say is that if we read between the lines of what management has said since Q4, they said they're going back to the growth mode. So you can imagine more sales and marketing. I see SoFi advertisements every time I open a basketball game or like a UFC match or something like that. Website traffic is at the highest level. Basketball season is in full swing with the play-in tournament and everything. So I wouldn't be surprised. I don't think it's a typo either. I wouldn't be surprised if we get 900K members. I think 880, 890 is within the realm of possibility. If Chris went 903, I'll go 910.
I can't
Steve?
believe you just said 910. I legitimately have written down something higher than that.
What is it?
I'm going to go 925.
All right.
What do you think?
So this is net new members, right? Is what we're guessing, or are we just saying new members?
New members, 925.
Okay.
Yeah, new members.
903.
Not net.
So
you surprised me, my man, because you're like, I'm disappointed. I haven't sold yet. I've turned neutral on Seeking Alpha. 925.
Look, just because I'm not happy with their communication doesn't mean that they're not running a phenomenal business and they're doing everything right. I'm nitpicking over things I want to see that has nothing to do with what they are succeeding on.
What's fair?
all right. Should we go to the segment breakdown on revenue?
Yeah, go to
Yeah.
So I made a prediction for revenue, EBITDA, net income, and EPS.
So
Roy,
revenue on
maybe
that-
you and I, let's do segment revenue real quick since you
Sure.
already had it, and then
Sure.
we'll go total revenue.
which do you want to start with?
So let's see. They report. Well, let's do lending, financial services, and then tech platform.
Okay.
Oh, you want to break it out by each one?
You don't have to break it out. Me and Roy will do that real quick, and then we'll just
Yeah.
do total.
In like corporate, we're all guessing on anyway, so it doesn't really matter.
Yeah, that's true.
You said lending. Lending, I have 395 million, which would be a slowdown quarter over quarter. I think they're just going to be a little bit cautious with it. And I also think that when it was hypothetically floated out there that they thought about shifting all of their lending over to the financial or the loan platform business, I think that they're probably doing more of that. So I'll be a little bit larger than on the financial services side, but I do think that they're a little bit slower on the lending side.
So I think I have 440 million. I think that there's going to be growth. The reasons why are number one, that they lowered their APY that they're paying out. And so like their net interest margin is going to grow, I'm pretty sure, in this quarter because they did, they've dropped the amount they're paying out. So I think that the net interest income is going to make up for any slowdown. The other thing is that now that they're profitable, they're actually growing their tangible book value by 100 to or right around $100 million a quarter, which means they can grow their loan book about 800 million. Well, probably closer to 600 million per quarter. So, and as you grow that loan book, your interest revenue is going to increase. So I think that they'll probably still have some growth there. I could be wrong. That's my thoughts though.
Yeah.
Financial
it's growth
services
either way year over year, but it's not a. I don't know.
No, I have quarter over quarter growth even.
I hope you're right, but I think they're going to be a little cautious and moving over to financial services, which I have at 290 million. So a lot of acceleration driven by loan platform business. They have a lot of new members too. I think they're monetizing them well. They're launching out new products. So yeah.
I think so. I have it at like 277 million, and the reason why I really don't know when what could really swing this is when they actually started the Blue Owl Capital deal, because that on its own is quite a bit of revenue.
Sure.
And so if the PR wasn't like, they talked about that they had an agreement in principle on the earnings call. That was at the end of January. We didn't get confirmation of the deal until March 13th or something. So it really depends on that Blue Owl Capital deal, but I have it at about 277 million. And then tech platform, I have at 105 garbage growth quarter over quarter from, call it 103 to 105. The tech platform is in my penalty box.
It's 100 million for me flat. I
so
see
you have it down quarter over
the last
quarter?
2 quarter ones. There's 2 reasons. What they've guided for, it's very slow. The last 2 quarter ones, and one of them was because a large client left. They actually slowed down from quarter 4 to quarter 1 as far as revenue, and I think that part of their guidance might be because they realize that they lost a client. Sometime after quarter 4 was over or late in quarter 4, and they know that that's falling off in quarter 1. I hope that's not the case, but so a small slowdown quarter over quarter.
It's interesting, Roy, that you have down quarters for both lending and technology platform. And I think you had down quarters. I think last quarter was a down quarter prediction for tech platform for you as well. Or maybe it was lending.
I've been pretty bearish on the tech platform. Steve and I would have to fight over who's more bearish on it. So,
and then for the Blue Owl deal, that's the one that was inked in October, correct?
No, Blue Owl was inked this quarter or in Q1 sometime.
Oh, I'm thinking of
that was the that was the $5 billion over 2 years.
Did they mention whether the Fortress, because this is something that I had a outstanding question on, the Fortress extension, does that go on top of the original term, or is that an extension only once the original term is done?
I emailed investor relations. They got back to me and said, yeah, that I said, is it just an extension? That's how I understood it. I could read you the exact email, but they basically said that's probably like your interpretation is mostly correct. We'll talk about it on the earnings call.
Oh, cool.
So I think it's just a continuation in Q3. Or I don't think they said we will. I think they said that they might, that they'll probably address it in the earnings call.
Real quick before we jump to corporate and then overall, and we'll all chime in on that. The other piece of news was related to student loans. There was another product that they launched, and I liked your post, Chris, the emit style of this is the biggest deal. It's a nice product that's relating to student loans. But the bigger deal was the Trump administration has officially notified folks that, like, hey, if you're in default prior to COVID on student loans and you're still in default, you're still in default. And as a result, then you're going to get notifications later in the summer. There are 5.3 million people, I believe, that are under that. And they expect that because you have to be 270 days behind payments. And this counts from prior to COVID as well. I think something like 8 million people in total might be impacted. But again, those notifications don't really start coming out until, for the most part, until summer. And they'll really begin to ramp there. I think this is the segment of the student population that is always like waiting into the deadline and even past it. So I would not expect meaningful student loan changes in quarter 1. A little bit in quarter 2. Quarter 3, I think, is where you're going to see the ramp.
So feasibly, and I'm curious to hear from you guys, what percentage of this 5.3 million would fall into SoFi's demographic? Because I would imagine it's like incredibly small.
5.3 million? What are you talking about?
There's 5.3 million people that are
that are going into default. Yeah. I would guess it's a decent amount of people. Just not because these are low quality people, but because there was no teeth, right? Why pay back a loan if you have no teeth and your interest rate's fairly low? Like, people are lazy and they put stuff off. Even responsible people, right? I don't know. I do think that it coming back with teeth is going to be a bit of a tailwind, because people are going to want to refi. They'll probably want to term out their loan so that their monthly payment is lower, even if it's a worse interest rate. Like, stuff like that happens.
Well, I think another interesting highlight here is we've seen in the past when the moratorium was announced that they were coming to an end, you saw an initial wave of refi immediately upon that news, as opposed to when the actual deadline is coming up. And so I know Roy is saying like, hey, not really in Q1, a little in Q2, mostly in Q3. I would honestly say, well, we could actually see a lot more sooner, because the moment that that first notification comes out or that news comes out, like you would just go to refi. I might be wrong.
Those are different students. There's the A students that are first in line, register immediately when classes come out, turn in stuff as soon as they're like ahead of the deadline. And then there's others that like drag it out.
Yeah, but those A students are SoFi's demo.
If people are in delinquency before COVID, and that's that 5.3 million population, they are the latter type, not the former type. I mean, there's some exceptions, but most of that 5 million are going to be that. I'd love to be pleasantly surprised. We do know the 90+ day delinquencies. They broke this out, in the earnings. And for student loans, I've got it up here if you want to throw it up here, although it's pretty small. It shows the percentage, and it's
low. It's so low.
Very small. So I expect that will, of course, increase a good bit because of what we're seeing, but it's still very small.
Well, I don't think so, because these are all their private loans. These have been due the whole time, right? Like these are their existing loans. So these people have been paying back for the last 5 years when everybody else has been skipping payments.
So I guess to clarify, a good bit is like, that could jump like 10, 15%, which sounds like a lot, but you're looking at like 0.1.
You mean 10, 15 basis points?
Yeah.
Oh, you're saying percent of the current.
Yeah.
Okay.
No, it's not going to normalize to like what? No.
Okay. Anyway, let's get to, so corporate revenue I have as minus 40 million. Doesn't really matter, but I just have it flat.
I had -8, and it's just guessing based on like the annualized divided by 4 and a little bit less because it keeps getting a little bit less. I don't know. So,
all right, so let's go total revenue.
Yeah. You want to go first, Chris, and I'll sound more?
Sure. I'm at, so the SoFi guidance, I think, was 735 at the midpoint. I didn't check today to see where analyst estimates are, but I think it's somewhere around like 740. It's slightly higher than guidance.
I did check today.
I'll pull it up. I'll pull it up after I give you mine. So all my numbers come out to 782 million in revenue. So I have a pretty big beat, both relative to their guidance and relative to what Wall Street expects.
I'm close there just because I expect a lot less negative corporate revenue. So 777 is mine.
Lucky number. What was their?
The analyst estimate is 739. And the midpoint of SoFi's guidance was 735, if I remember right.
Okay. Steve, what is your total revenue? Because I know you did that number. You just didn't break it out.
784 million.
Oh, right in the middle. Oh. Or no, actually higher than Chris.
No, slightly higher than me.
Wow. Steve, any justification for that 784?
No.
I thought you were going to say because that's what it will be. So.
That's what it will be. Roy is correct. No, I mean, look, they're projecting on the high end 745. I think Noto's sandbagging. So I picked a number that I think is reasonable for a sandbagging quarter.
Right.
What about you, Tevis?
I haven't done the numbers.
Okay.
Dog ate my homework.
Got it.
So I will probably have taken a look by the weekend. But I agree with a lot of the justifications that you guys gave with the segment breakdown. I think the loan platform business is going to be interesting because you're going to see all that revenue come in through the financial services, but originations are going to come in through the lending. And so you're going to have a decoupled ratio of, what we can expect from like originations to lending revenue. It's not going to hold true. Actually, on members, do we think that product ratio is going to hold or is going to continue to dwindle? I know it's kind of been holding over the last quarter, but curious.
I think it holds. I think it dwindles until they launch the crypto invest platform.
I agree with Roy that the crypto invest platform is going to see that. I think we start seeing an increase as soon as they drop crypto.
Yeah. Okay.
But I think it holds. because it's been really, really steady for the past
It's
3
like
Yeah.
1.42 or something like that ratio. 1.43.
I have it somewhere.
Yeah, I think it's going to be a slow bleed. but it's not gonna
1.46.
fall off a cliff. So.
Or
They do with marketing and everything. They do a very good job of like cross selling their products also on their app too. It could be better, but I think it's working. So it just takes time.
All right,
Okay.
EBITDA.
I don't have it.
Oh, okay. Do you have an EBITDA number, Steve?
Yeah, 211 million.
Okay, I'm at 213 million.
Wow, we're
So
right
those
there.
are really, really close. Yeah.
We're all going to be close on everything, and then they're just going to like blow it out of the park like they seem to do.
We'll see. If they blow my numbers out of the water, I'd be
Well,
because we're way ahead of analyst estimates.
yeah, with yours, they could if corporate revenue doesn't do what you're expecting, because that's a pretty big drag.
That's true. Yeah, that's true. And then net income, I have before taxes and after taxes because now that's a thing that we have to worry about. I pick up on Roy's sense of humor.
No, it's not. Net income is after taxes. It's net.
Well, yeah, but like you're right. So net income, but so that we could go apples to apples with like their previous quarters, right? Because in previous quarters their tax rate was effectively 0. And so that like you could see the continuation. But anyway, after tax net income, I have 54.6 million. So right about 55 million. Roy, Steve?
Yeah, I don't have it either.
I'm at
55 million. What is that? 4 cents EPS?
It'd be
4
almost, it'd be 5
EPS,
cents.
So I don't
It would
remember what
round
I
it.
did for the net income, but however that breaks down.
Mine would round up to 5. It's like 4.7 cents.
I'm at 61 because I have 5 cents EPS.
Okay.
And I have a justification for that because the consensus for this year is 25 cents. So I think they have to start off the year around 5 and then grow into that because I got to think if the consensus is 25, they're going to come in with 30.
Yeah, the consensus quarterly, I have it up. So the consensus is that first quarter will be 4 cents, second quarter 6 cents, third quarter 7 cents, and then I actually don't have the fourth quarter on here, but
Yeah, 16
Yeah,
analysts are
38
saying
cents.
25 cents for the year.
The 4
38
cents. The 4 cents consensus, is that from analysts or is that like
That's analysts.
what's in their guidance?
SoFi's guidance is only 35 million at the midpoint,
Right. So
which would then be 3 cents.
yeah.
On guidance, well, if there's other numbers, but we should talk about what we think that they'll do for guidance. Is there any more numbers you wanted to share, Chris? Or
Nope, that's
Steve?
it.
Okay. Guidance. Do you guys think that they raise, they keep it the same, or they just say, hey, we're gonna pull back our guidance because some others are doing that?
What do they do every freaking quarter? They beat and they raise. It's a triple beat because you raise. They're going to do a triple beat this quarter, next quarter, and the following quarter heading into Q4,
So
just like they always do.
the counter of that, Steve, is that what we have this time around that we don't last time around is the tariff situation, more
SoFi
macro.
does not have tariff risk.
I understand that, but they're also the most conservative company you're probably covering.
Okay.
For a lot of value companies.
What they have on their side is Powell's backed into a corner. And I don't know if you want me to go on a rant or not, so I'll give you the 30-second instead of going on a 5-minute macroeconomic rant about this.
I know how you feel about Powell.
But Powell's backed into a corner. Most likely they're going to start cutting in June or July. And we're getting at least 3 cuts this year. There is no way around it. And when you cut by that much after rates were where they were, SoFi's originations, like other financial institutions, are probably going to go through the roof. And I think you're going to have a really strong year this year. And Noto's going to raise guidance every quarter because they know it's coming.
They've baked in 2 rate cuts for this year.
Noto was wrong in what he
1.5
last year.
1.5 even, yeah.
So I wouldn't go by what SoFi is guiding for. I'm going by what 1 CME group is projecting, 2 what the actual macroeconomic outlook is based on what unemployment's doing, what CPI is doing, what oil is doing, what PPI is doing. There's no way Powell is only cutting 2 times.
I think they'll still go. So here's one of the issues every single time is that they guide conservatively. The revenue analyst estimates for revenue next quarter are going to be like 790 million, which is pretty high. The last few quarters, what SoFi's done is they've raised the full year guide, but then the next quarter guide is almost like flat with what they just did. They do that like every time, and it's frustrating because I'm like, I know you're going to grow this quarter. Don't tell me you're going to be flat, because like they do, but they do it every time. So they will probably guide relatively flat. It'll come straight, like just barely under analyst estimates, and give a little bit of room for bears to say, look, they missed the quarterly guide, but they will increase the yearly guide like they always do. That's what I think happens.
Hey, I think that they actually have a real opportunity. I don't think they'll do this, but since there's a lot of other companies that are hit by the first order effects of tariffs that either won't guide or will give multiple sets of guidance, we're seeing some of that, or are very, very cautious and conservative. What they could do is raise by more than it's expected. Not well for the end of the year, whatever, but for the next quarter, just kind of showing the confidence, because they're not hit. Steve is right, by any first order effects of the tariffs. Now, second order, there is some impact depending on how it all shakes out, and we don't know. That's a big unknown. I don't think they'll do that, but if they did, it would just put a nice contrast versus like, hey, there's a lot of people and companies that aren't really sure. And here's conservative SoFi saying, yeah, we're accelerating a lot. And the reason why they should be confident that they can do that is a loan platform business. Like, we're seeing that just absolutely excel and accelerate. We're seeing deal after deal. We're seeing expansions, even in the face of macro uncertainty. That platform is just so incredibly bullish. It's a free money glitch. It just is. So they should be confident enough to, I think at the very least, that gives them the confidence to do the typical. But I think that they have an opportunity to do a little bit more than that, and it might get noticed.
So
Can you put up Joey Friday's comment real quick before you go?
So everybody
I like
thinks
this
that they're
one.
raising.
I think that they'll raise the full year guide.
Do you want me to do the rant or not? Up to the 3 years since
Well,
said it.
Sure. Like, time box it to 3 minutes, but do the rant. Go for it.
All right. So look, the Fed has a dual mandate. The dual mandate is price stability. And Chris is cracking up. I don't know why. I'm not that funny, but they have a dual mandate, price stability and maximum employment. Going back to 48, every time unemployment's rate got increased by 1%, we've either been in the beginning of a recession or headed right into a recession very quickly. It is the one fail-safe, not inverted yield curve. It's unemployment you got to look for. So what are the key indicators right now? You have unemployment increasing from 3.4% to 4.2% since April 2023. It's almost up 1%. It's 0.8%. You have, over the same period, inflation's come down from 4.9% to 2.4%. And that's in a period where oil was not as low as it is now. And oil has been got as low as around 60. It's trading around 65, 66. The ramifications of that have not been felt through the economy yet, with oil being that low. Oil going that low, input costs go down, transportation costs go down, et cetera, et cetera. So now you have the threats of AI, the threats of autonomy. You have also corporate debt on 5-year cycles. Where were interest rates 5 years ago? Next to nothing. You can't use conventional wisdom anymore. And everybody likes to say, well, look at the 80s, look at the 90s, look at historical interest rates. You can't do that anymore because all that debt is all matured. The biggest thing with the debt cycle is whether you did 5 years or 10 years, most corporate debt's 5. The past 10 years, more than 50% of it, the Fed has had the Fed effective rate under 1%. So now you have a combination of AI coming for jobs, in addition to margin compression, because if companies borrowed when the Fed effective rate was 50 bips and they got interest rates at 2.5 or 3%, and they have to refi this year, if they refi at 5.5, 6% because the Fed effective rate is 4.5, that is going to make margins compress, and that could cause additional rifts. And that goes against the other side of their dual mandate. We really don't have inflation right now. Prices have been coming down. Transportation costs are coming down. Look at the price of the gas pump. Now, 2.4% is so close to the neutral rate that they can't split hairs over that, because unemployment is so much more important than whether they're at 2.4, 2.6, or 2.2%. So the Fed's backed into a corner. And what would be the worst thing they could do is be late this time. They got away with being late several times already, and we had no landing, which was the best scenario we could have had. Fed actually did a really good job, but they don't have that ability now because of the debt terming and because of AI. They're going to have to cut rates. And I don't see a way around it. And I don't believe for a second they're only cutting 2 times this year.
May or June is the first cut.
Not going to happen May. I think they're going to use tariffs to try to slow play it, but they're cutting before Jackson Hole. That whether it's June or July, I don't think it's going to make a huge difference, because either way, you're still getting 3 or 4 rate cuts this year.
Yeah.
All right. Now for the fun part that you guys have been waiting for.
Tevis just made a degen bet.
I did make a degen bet because this has been, I do jump immediately on the gambling. So I have to ask, predictions for the movement of the stock after earnings. And Matt, I have been bookmarking his comments, but he felt ignored, and so he decided to donate to highlight the comment. Will they hit the $25 mid-2026 management option target? And does anyone want to bet that SoFi is below $25 by year end? I just bet Matt $500 that SoFi will hit $25 this year. I would probably lose, but
hold on. Chris, when are the PSUs? What's the date?
It's
June 2026.
June 2026.
June 26th, right?
Yeah. But the argument, Steve, that Matt is making is that if they want to hit the middle or the highest tranche, that they need to be at least 25 by end of 25, so that they can then be 35 or 45 by around March of 26, so that they can essentially be on time to hit their tranches by June.
So Chris, you would know this. Is it 60 or 90 days they have to stay at that level for?
Oh,
I just don't remember.
I think it's 9.
I think it's the volume weighted average for 90 days.
90 days. Okay. Why wasn't I asked to get in on this bet?
I mean, Matt has an extra $500. I wouldn't put it past them. So if Matt wants to give up another 500, it's an expensive pod that he chose to catch. But
I didn't say I want to take Matt's side on. I just want to get down on the action.
Is it Canadian or United States, or is it Canadian for you and United States for him?
It's United States. I'm here to make some money. I'm not here to mess around, Roy.
I mean, that for you, since you're a multimillionaire, that's pocket change.
Oh my God. So, do you guys not think it's going to be 25 by 25? Like, it sounds too good to not be true. This is my DVD.
I had a video that was entitled basically that, but it really depends on macro. And that's very uncertain. Like, if they don't reach what they're building as far as an actual business and company like this year is very good, very exciting. I think 2025 is going to be a great year for the company, and it should translate into the stock. But if there is tariff uncertainty and all this chaos that's happening at the executive level, and we get a recession on top of that, it's not going to be 25. So,
a lot of it has to do with macro.
Sorry, Chris.
Agreed. No, I was just agreeing with you. A lot of it has to do with macro, like anything else, right?
Yeah.
I think you're right. In neutral,
it's going to be negative GDP growth.
Yeah, that's going to hurt.
And with unemployment where it is, I said the other day, there's a good possibility we're actually in a recession right now.
I mean, lots of people have said we've been in a stealth recession for a long time. That's just been pumped up by government spending to make it look like we're not in a recession, right?
I mean, whether you want to go down that road, that's something that you can't prove. I mean, the only thing we can prove is what the GDP numbers come in at. I mean, we pretty much know Q1 is screwed. So I would say there's a good chance we're in a recession right now, and we come out of it in Q3.
Yeah.
All right, stock price.
Stock
We'll
price.
finish with the stock
after-
price.
So are we doing end of the week or end of the day?
Whatever you want. End of the day, I
You
think is
choose,
what we
Roy.
usually do.
End of the day. Let's just do end of the day. Close, not after hours. I'm going to say 11. And so you saw my earnings. They're very good. I'm guessing the 11 is based on a macro pullback.
Please, like you're justifying the 11 as if it's not your go-to number for all.
As if it's not the number that you've given every single earnings for like the last 5 earnings in a row, including when we were at like 6.
Hey, a week ago, people would be like, yeah, 11, let's go. And now it's like, come on, you bear.
All right, Roy 11. Chris.
And where did we close today? Close to 13.
Yep.
15.
Whoa. Okay. Chris 15. Steve.
I was going to say like 1450, because I think we're going to go up and then sell off the next day.
That's fair. So we only have one more trading day before earnings, right? Because it's on Tuesday
Yep.
before the bell. It's at 1288.
I got to tell you, the option market's pretty crazy on this.
It is.
There's a lot of people betting that this thing moons on next week.
Dude,
We went up $2 this week.
I got $1,000 in premium selling covered calls at 18 for May 2nd, which is like whoever gave me that is like, all right, cool. If it goes to 18,
When did you sell that? Because right now those options are trading at 2 cents.
well, 2 weeks, 3 weeks ago. So
Yeah, I would cover those, man. Cover them.
yeah. You
Yeah,
just
I
have-
mean, Tevis, the 14s, there's almost 12,000 on open interest right now. On the
yeah, you
14s.
think I should write? You think I should close them and then write other ones for like 16 for May 2nd?
No, 16's got 8 cents. I mean, those are probably. I may write those. I may write.
Of course
that
you would.
against
You're bearish.
shares actually.
Yeah,
I'll do
David
it.
M said it this way. He said lately, Mondays. Oh, I lost his space. Have been huge red days. Don't forget this Monday, the Dow was down 1,000 points. A lot of Mondays have, and it's all around Donald Trump posting and his posting habits over the weekend. So I don't
Yeah,
see
the
why.
next week could be a big week. You got Microsoft, Amazon, and Meta all reporting next week.
Yeah, there's
Oh.
going to be a lot of big names reporting.
Yeah.
It's a big week.
When does Apple report? Do they report the following or next week?
I think it's the following week. I don't remember. But
You have at least 3 of big tech reporting next week.
TJ says he has 3,000 covered calls for June at $15.
it's a lot of premium.
Okay, that's crazy. Okay, what else do we want to chat about, or do we want to wrap there? What are we thinking, guys?
Did you say your price target prediction, Tevis?
I can make one up for you right now if you want.
Yeah, you have to make one up.
That's all the rest of us did.
Except for me. You
Okay.
knew what mine was.
It's at $13. I think it's going to pump. Well, let's just say it closes Monday at like 13.20, and then I think it's going to pump. Let's say 15%. What is that, like $2 ish? So I'll go 15.5, 15.5.
Yeah. I think a lot of this is going to depend on like if they can announce some exciting stuff too, right? Like we talked about, I do think that we might get a cash coach thing. I think we might get crypto news. I think we might hear there's a small possibility we'd hear about level 1 options, which would end the meme, which would be too bad. But I do think that we probably get something about one of those things. It'd be like if they announced a Galileo deal at the same time. We got actually 3 Galileo deals last quarter also that they announced and that they talked about. So, I mean, there was a pretty good amount of information in the last one. So we'll see, right? There are some other kind of non-quantitative numbers that they could throw out there.
It would be good if they have that, the case study of like, hey, here's the 3 examples that we have for Galileo again this time around, simply to highlight the diversity of Galileo clients that they're going after, because hotel rewards, government agencies, and just government partnerships. I know Noto's been like tagging Lutnick on everything, which is kind of interesting. Like I just want to see the diversity of Galileo clients, because it helps broaden our set of expectations for where we can plug in Galileo solutions. And then I do think, to Chris's point, that they will absolutely announce some exciting new product offerings. They're going to be asked about the loan platform business on the call. And I think that has the potential to get people really excited, because once analysts ask them about the loan platform business and they talk a little bit about, hey, what is the demand that we're seeing? Analysts are going to model that into all of their predictions going forward and raise all their price targets immediately after earnings, right? So that's the thing that I'm excited about, is that loan platform business now completely revamps the set of expectations that the market can feasibly, want from SoFi.
We'll all be streaming the earnings. Somebody asked. It'll be on all of our channels.
We will all be streaming the earnings. Yes, Steve.
Is it before the bell?
It is before the
before
bell.
the bell. It's way early.
Can you join us?
Maybe I'll take the day off.
They'll do 7 a.m. Eastern is when they'll release the
I haven't
numbers.
taken a vacation day in so long. Like I lose so much vacation time as I'm a workaholic. Maybe I'll take an hour or 2 of vacation time.
I actually have a huge meeting on Tuesday, but luckily I'm Mountain Time, so this is way earlier than my business hour, so I'll still be on the earnings call.
Yeah, I'm not sure I can make it at all. And frustrating.
Oh, you're doing PayPal. That's right. Hence the shirt.
It's been crazy busy for me, and if I have the time, I might just do PayPal and just do a short one.
Roy, can I tell you what Alex Chris should do?
After hours.
You still want to do
so if you're on Roy's channel, just hop onto my channel for Tuesday morning if you care about SoFi more than PayPal.
Exactly. Yes. Hop on Chris's. Yes. If you want to share, like, just real quick, Steve, that'd be fine. We don't have to do it after hours.
They should, the $5 billion a year in buybacks, they should split it and do a $2 billion dividend and a $3 billion in buybacks. The $2 billion dividend would be something like, I don't want to give a bad number now. I thought it was like 3.5% or something like that. Hold on.
That's not a bad idea. I think it's going to attract a whole new class of investors.
Opens up a whole new class of investors. Nobody cares about the buybacks anymore.
Yeah.
It hasn't done anything for them. It's
3.125% approximately dividend.
Yeah.
Are you thinking a special dividend or like total?
No. Implement a dividend program, put it at over 3%. It'll be one of the largest dividends in tech, solid dividend, and you start a dividend growth program. And they have more than enough cash. The buybacks have not moved the needle on this company. They don't need to do $5 billion. They could do $3 billion and start a dividend program at $2 billion. If you did 2.5, probably get it close to like 3.8.
Yeah, I don't
you
think
watch how many people start buying that company. Then you watch the volume on that.
Yeah, I don't think they'll do that yet. I'm not opposed. I think by 2027 or in 2027 they will. But Steve, they did refinance all of their debt structure that was near term over the next couple of years. They wanted to lock in some lower rates, so they do have the flexibility to do that and maintain aggressive buybacks for a bit if they wanted to.
I mean, they have more cash on the balance sheet than they did that, right?
Mm-hmm.
So it's not even a factor. Their free cash flow covers their return of capital to shareholders, but No, the street has not cared about their buyback program. They should implement a dividend program. Watch how many ETFs they get in. They'll probably get in VYM and SCHD and a few other dividend focused ones. And you'll open up a whole new class because they'll have a larger yield than Cisco or IBM.
So can we end on a fun note? Because we're at an hour and a half now. I do want to end relatively soon by saying we're going to be covering the SoFi earnings on Tuesday morning before the bell. So on my channel, on Chris's channel, if Roy does decide he can make it on his as well.
On my channel,
we will invite Tannor for that one. He is invited. But to end on a high note, Chris, maybe you can walk us through this. Who's winning this gift exchange since we have Steve?
Oh, I actually have
Steve is
this.
definitely not
I
winning.
posted about it.
Yeah, he did.
I am winning the gift exchange. Well, let's see. Steve is winning because I gave him the best one.
Yeah.
So far. Let me pull it up.
Steve gave the worst.
year's not over.
I told Tanner as much as I hate Joby, I would have preferred to have Joby.
Are you serious?
Yes, I hate Block, dude. I don't really, but like the stock I do and Jack.
I'm
Dorsey,
not a fan of leadership, but the numbers are the numbers.
it's cheap now. So Steve, you may not be aware of
Right,
this.
there you go.
No, you are. I bought puts on Block, and of course they printed because everything fell.
Zoom.
Yep. Zoom and enhance. Okay.
But I'm out of this.
So this is what it was on April 22nd, right? So a couple days ago. So TMDX that I gave to Transmedics that I gave to Steve is up 37%.
Chris, why didn't you tell me to buy more?
We talked about it on the show. You had to do your own DD. I only gave you $100. You have to decide on your own to buy more. Right. XYZ is down 37%. So the short long. So you long Chris trades and short Steve trades is what we're getting out of this.
100%.
Hims is basically flat. That's not financial advice. Joby minus 27, and then Lemonade is minus 25.
Of course, all of those look better except for TMDX from the last day and a half.
The last couple of days have been good for the other stocks.
By the way, Transmedics, like I was looking at, so I bought some downside bets over the next few weeks, just kind of as a hedge, just because we've risen up. It feels like we're going to get some of that back. And I looked at Transmedics. I'm like, man, it's up a lot. It's a good company, but like it's elevated. So I was like, maybe I'll do that on Transmedics, or at least some of the hedge on there. The options are very expensive on Transmedics. I know it's been moving a lot, but my goodness, if you're holding some shares, Chris, look and selling some covered calls.
I have, I think just one covered call. My position's not that big, so I think I only have like one covered call sold on it. So,
all right, thank you everybody for being.
Thanks everyone.
Thanks to Chris and Steve for being able to join. Please join us Tuesday morning where we're going to cover earnings before the bell. It's going to be a fun time. We're going to be breaking down the earnings report before the call, leading up to the call, listening through it, and then sharing some thoughts right after. Tuesday morning, my channel, Chris's channel, Roy's channel, Tanner's channel, and we will see you then. Thank you so much. See you next time.
Thanks, everyone.